In today's video, I'm going to go over using this one trading strategy, how you can 20x your money in one single trading day or make 20 reward in a single day just trading ES or NQ. Let's get straight into the video. Alright, so now I'm on my current trading view and this is the one trade I personally took today and it's my stop hunter specialty setup here for a 6 risk reward targeting basically London session high, and I'll go over more in detail about how I took this trade and why I took this trade and why my directional bias, which is very important in your trading by the way, was these highs here. But first off, let's also go over the potential setups too that you guys could have taken yourself that I personally missed. So yeah, let's get straight into it. So the market opened 9:30. So whenever I'm trading New York session, I'm always basically waiting for 9:30 because you guys know before 9:30, ES or NQ, both indices, they tend to consolidate a lot more. The ranges are much smaller. As you can see here, like for example, this is the range here. Prior to 9:30 open, it's much smaller. And you can see how the range expands out after 9:30 opens because that's when you get a lot of volatility, such as this. So basically, I got on the charts when price was already down here roughly in this area. So that's when I got into the charts. And I'll explain later, like I said, the other setups that you could have potentially taken today. All right, so let's go back here to where I was at. So I got to the charts a little later today. Usually I get it around 9:30-ish, but this is when I was seeing price, essentially in the chart. So when I was seeing price already took out this internal low here, or not really internal. This is almost basically swing structure here. Even though this low didn't make a new high, this is a potential mitigation cycle, for example, right? But we did take out this low once I got on the chart. And so when we take out that low, I was seeing and asking myself, where is price going next? That's something you always want to ask yourself whenever you are trading, guys. That is called draw on liquidity or DOL. You might see on my charts, I write DOL, but it's basically draw on liquidity. And so my draw here is this low here. And why, you may ask, this low? Well, to be specific, the reason why I chose this low is because there's nothing else unmitigated here. This is already fully mitigated, all right? And this is already mitigated here, which caused this move here basically, because that's your entry model here. Explain this later in a bit. But the next piece of unmitigated structure or price is basically external liquidity, which is this low that made this break structure. Ignore the X's here. That is from the ETU lit indicator. I'm just gonna close that out real quick temporarily so you guys don't see that. But basically this low made this break here to the upside. Hence why I'm looking for this low to get taken. So I wait patiently for price. And at this point, as you can see, we made basically equal lows here. Now you guys know that I've been sticking to my channel for a while. I personally do not trade equal highs and lows. I don't use them as liquidity targets because I've seen a lot of times they don't actually get ran. All right, despite common belief online that everyone keeps saying, wait for them to get ran. That's just not true from my personal experience. There's not enough data suggesting that is a much higher probability. It could be a little bit higher probability, but I'm looking for something that's much higher probability, and that's just not statistically true from my experience in testing. So basically, at this point, I was unsure whether this low got taken out or not since it was equal pricing. Now, if you go on maybe like micros instead of the mini chart, which I'm currently on, you might see a small wick or some sort, potentially. This is just potential things. This is what I see from time to time. I talked about this within the course modules where there's also SMTs between the same asset, but micro and mini charts. And it is what it is. Sometimes the mini takes it out, sometimes the micro takes it out while the other one holds. But usually I do find the micros being a bit more spiky because of how pricing works on them. Anyway, at this point, I did not take this entry here. Otherwise, I would have taken it if it was a clear take sweep, but here it was not. So you can see later price printed, and this is basically where the IFG entry model is. Why? Because this is your IFG, and because this is a bearish fair value gap right here. We have a body closure above that, so you're entering here, and then your target is the highs, right? And I'll explain actually right now on the higher time frame why my bias was the highs. So if we go to the higher time frame here, if we don't lag, all right, so we go here and you can see how this is with 30-minute here. So the 30-minute, we have this massive gap to the upside here, guys. So this is my draw here. Remember, people are probably shorting this gap. Me personally, I'm not shorting the gap, I'm shorting the imbalance I'm shorting, I'm into the gap. So my draw here was higher. And we also did a massive liquidation of all these lows. Remember, we're bullish. Even though we made this dump here, we are still bullish in the market. All right. We can still see some upside at least towards here. Whether or not we take out these previous day highs or these highs here, that doesn't matter to me. And the reason why that doesn't matter to me is because currently we are trading here. So I don't care if price, takes out these highs here on the 30-minute. It doesn't matter to me because it's unlikely to go that far anyway. And that's not my trade idea here. My trade idea is we're going towards at least this mitigation here on the 30-minute. And because of that, I'm okay, with taking these longs here because that's where price is seeking. So let's go back on a lower time frame here. Remember, cycle between time frames here. You can see how this is basically a mitigation cycle. So price failed to make a new high here. It's not a failed break structure yet because we then later take it out. So I'm basically waiting for this. We have a liquidity sweep A plus setup, and you could have taken this IFUG and, like I said, target London session high. You could have made a nice 5.2 risk reward. Now, unfortunately, I did not take this trade here, this IFUG setup. The reason why is because I was unsure about, like I said, these being equal, and I don't want to get faked out here because worst case scenario, it takes out this internal high and then it dumps and then takes out the low for real this time, and then it goes higher. So I didn't want to get caught up in that, and it played out this time, but not always going to play out. And you can see if you use a more aggressive stop loss, you could have got 10 risk reward on the long. So that's already a 10R potential just from the first setup. Now, my setup here was here. Because I missed the initial long down here, I waited patiently. I tell you guys, patience is always key, guys. Patience pays. All right, I waited patiently, and I got my setup here. This is my stop hunter setup because this low made this new high internally. Remember, internal structure versus external structure. You got to know the difference between the two. Now, you could have also used this internal low here, but I usually like to use the first bearish candle I see, unless it is like a very tiny pullback in the middle of this leg here, then probably not. Like I'm not going to use this bearish candle here because this bearish candle also, this low didn't make a new high anyway. Either of these two lows you could have marked out. And it doesn't matter in this case because this one candle that entered on when I waited for the candle closure, it took out both lows anyway. And that was very good. When you see two lows getting taken out for internal stop hunter setup, that's very good because now you can have a tighter stop loss potentially. Now I got 6 risk reward off this trade here, but if you have your stop loss set to where I usually tell you guys prior to mitigation, you could have got a whopping 13.5 risk reward. And ultimately later plays out, as you can see. Again, like I said, draw was a high at least. I don't know what would happen after we take out this high, but I do know the draw is at least towards that high. And you can see it played out and absolutely insane, right? Killed it. Now my stop loss was slightly below because I was covering this mitigation. I didn't want to take the risk here personally. In case the price did want to just come mitigate this PY because it's so close here. I was okay with taking a 6 risk reward. This is still an insane good risk reward. Even if you targeted New York session high or the next internal high, it's almost 3 risk reward, which is ideal for my backtesting data. So that's where I made my 6 score personally trading, and I was basically done at this time because it's already 1 p.m. and I was fine making 6 risk reward in a single day. Even though, sure, I missed out on more profits later, which I'll go over the potential setups you could have taken with my strategy. Otherwise, this is basically my trade for a day. Now, let's go over the other potential setups you guys could have taken if you were up the entire session. The first one is obviously this liquidity sweep here. Ignore the break structure drawing here. All right, that's just from the indicator. But this is a liquidity sweep here. You just turn off the indicator real quick. And this is your OB entry model. Again, this candle high right here, candle wick, that's your OB. And then where's your target? Well, because we're bullish, we're anticipating bullishness, you can target anything as either these highs here could have been your target. This would be your BOS. And then here I'll mark the structure better for you guys out here. This would be a liquidity sweep, because we're anticipating higher pricing. Again, a lot of people, they trade off just pure reactions in the market, and that's where people mess up because people are marking this as change of character because this low made this new high, but it doesn't matter to me because the bias is upside. Guys, the bias is upside. We also mitigate this, as you can see. There should be a PY here. Yeah, this already got mitigated, I believe. So this is the origin of this leg here that made this new high. So not only that, but we also took out these lows. We swept liquidity, which is my A plus setup, into a origin. And so obviously at this point for a higher time frame, it should kick in and we should be going for this high here. Again, you don't want to have some crazy target, like I said, going for this 30-minute gap here, because what are the odds price runs 1.53% intraday? It does happen, but usually this happens on trend days on ES. Again, it's going to be a much bigger percent on NQ, but I just know ES very well. It's very unlikely unless it's a trend day, and you're very unlikely to be able to catch it off the first rip too. Especially because I'm taking my entry up here, my stop loss, instead of covering down here. Very well, price could do something like this and then go higher. So it's too risky with the stop hunter to target too far. This is why I tell you guys with stop hunter, target PY internal, next internal high or low, or go for your draw, which is what I did. But this is already 5 risk reward here. You could have TP'd, and where would you TP? Well, I do see something unmitigated right above here. You can TP here. Okay, let's say realistically you make 4.6 risk reward. There's 4.6 here. Guys, your next trade here, if you want to take a counter, again, I'm not a big fan of taking counter trend trade, guys, but if you want to take a counter, there's so many other unmitigated PYs above. In fact, this time it hit this unmitigated right here to the tick. So depending on how you entered, I mean, this could have been an absolute banger trade. If some people use limit orders, and unfortunately, the thing is with very small PYs, it's hard, I feel like, to use limit orders because you don't know how big the wick is going to be when it enters your zone or PY. However, the big advantage of small PYs is you do get an insane risk reward. Like, I mean, targeting ideally this origin here. This is an 11 RR trade here using just a limit order. That's it. You're not even looking at the chart. You're just setting a pure limit order here. And let's say you set a limit order here. You can take a -1 and make an 11 risk reward. So for people that are telling me, oh, look, you chose this PY, why not this PY? Well, no, you can choose both PYs. I would just take a -1 and a +11 here, which is why this system and strategy is so effective. I mean, I would do this anytime in a day. Take one small R loss and make a +11. Who would not do that, right? I don't care if I lose this first one. Now, if you were just waiting for confirmation, do you think okay, that's fully mitigated. I think this is unmitigated here. The next PY or OB you could have used is this one, depending on how you want to cover this. There's about 2R potential here with the aggressive stop loss. So you could have made 4.6 if you wait for confirmation. You could have made another 2. If you didn't wait for confirmation, it's a -1 and a +11. You can see how that's so much more effective than just a, one and done 100% win rate here for this one trade, but you make a lot less risk reward because this is net total 10. This is only 2, so you're literally multiplying your risk reward about 5 times. So make sure you're backtesting this, so you keep track of the win rate, because this is just one situation, and you'll come across these situations very often. So there's 2 risk reward, and then let's say you're looking for longs, you got no confirmation here, so no trade here. At this point, I personally wouldn't even probably take this. Wait, no, sorry, I would take this because this got mitigated here, and you got your entry model here. So there's another one. This trade does depend. All right, this is either a -1 break even, or you TP ideally here for 4 risk reward. Because if you're looking for expansion, which honestly, if I was to take this trade at the time, I probably would have targeted the high. So this could have been just a -1 for me here. So we'll rate -1 here. But this could have been a -1 here for me if I was just still up taking this trade, because this is off this origin here. Even though it got ran through, to me that doesn't matter. It's still confirmation in price. Otherwise, if you targeted closely, you could have got 4.2. But I'm showing you guys all the potential outcomes, right, of how you could have traded today with my strategy that I teach. Now, the thing is, to catch this trade here, counter trending, there's not really an entry here. All right. The only entry I see is an impulse entry model. This is a somewhat small range. This is statistically, numerically, 10 candles is small range. If you just a candle break entry, impulse, whatever you want to call it, probably TP here, get another 4 sword. So this could have been more. we'll just write it down to show you guys the potential if you were to trade both sides of the market. All right, I personally try to stick with trading pro trend for the most part. I will take counters sometimes if there's a lot of confluences in my favor, which I have a whole entire confluence video, a checklist video within, like I said, the course. So just do Control F if you haven't found it and you're in the course. This is your liquidity sweep. This is your IVG. Again, you could have made 10 risk reward off this IVG, just depend on how tight your stop loss is. But as you can see, let's say, what is this? 4, and then this would be 4, for example. Just an example, if you're trading both sides of the market today, 4, 5, 6, 10, 14. And then let's say you take this here, about almost 5 risk reward, and let's say, imagine you wouldn't be able to take the stop under here if you're in this IVG already, because you'd be in this trade here. So just imagine this is an ideal scenario where you're trading both sides in the market. And I mean, you can add the risk reward 5, 6, 7, 9, 10, 14, 19 risk reward, and that's not it, guys. Because once we take out London session high here, you can look for a reversal, counter trending here, and there's an IVG setup here as well. And depending on where you want to TP for 1-to-1 or target any of these lows, can have a nice risk reward. So easy, you could have made over 20% or 20 risk reward today trading. But those are all the potential setups. Going over each one. And then let's go back, Control Z, so I can show you guys everything else about the rest of the day, how you could trade the rest of the day. Let me know, again, leave a like on this video, share with your friends, subscribe if you want to see more video breakdowns like these, where I don't just go over my trades, but also like how much potential risk reward there was and all the potential setups within the day, trading my strategy. One thing I did forget to mention here is this was an SMT essentially. If this basically was considered a sweep, again, you may want to check the micro chart on MES. It might have swept on MES, I'm not sure, since I trade minis. But if it did, this would be your SMT here basically. And so you can see NQ held. So if you were trading on NQ, I mean, it's still like 10 risk reward here. Targeting London session high, just like ES. It's 9.6. Actually, no, that's like 10.6 risk reward right here. And then you can see, obviously, it continues further, but you're not obviously holding your trade past closure. I personally don't, for the most part, because of spread hour. I can hold trades from A to session towards London session because there's no market closure in a sense, or spread hour, but because of spread hour, it's too risky holding trades unless your entry is very far or you're break even already, which is okay. But yeah, I personally, like I said, recommend you guys don't hold trades after or during spread hour. Let's go back to ES now. Turn on the indicator. All right, so now after this is already late. Again, like I say, I don't usually trade past this time for the most part. You'll see in some of my trade recaps I do, and those situations are either, you know, I woke up late, I missed the earlier session like today, and I will trade outside the kill zone. But ideally you trade within kill zone because TPs hit like much quicker. Instead of 1 hour, you can hit TPs within 18 minutes. I mean, this long here was a 7-minute long. Your IFG, using my indicator, you can see it marks it out for you. This would be entry. Again, stop loss is depending on you, but if I was targeting like this here, I either don't take this trade because bad risk reward, or I have to tighten my stop loss because I'm not going to take a 1 and 0.3 RR trade. All right. Me personally, my rule usually is ideally get at least 1 risk reward out of the trade. That would be considered a scalp to me, which is okay. And then you can target whatever lows you want. I thought originally this was a data wick, but this is a weird time for data news or any event to occur. So I can these just completely random spike in the market volatility. But depending on where you TP, this is another setup you could have taken. And yes, if you were, let's say, taking this here, you could have taken a loss going long here. Now there's a slight problem taking a long up here though, because we already took out the draw, London session high. And if you go to the 30-minute or higher time frame, you want to think about like this. Price isn't gonna just do a small pullback, continue higher, right? If we take out a more prominent high, such as this 30-minute here, you can expect a bigger move to the downside than, let's say, if we were to take, let me see if I can find a good example here. Like for example, this. right? We took out these highs, but these highs aren't really as prevalent. Short, yes, shorts did work out this time, but majority of times when we do take out a very prevalent high, you can expect a bigger move in the market. Hence, you can avoid discretionarily, or even you can create a mechanical system. Say if we take out 30-minute high or low within a certain scenario, again, you can backtest this or journal it. You can say avoid taking longs in very high premium, because technically this is premium in a 30-minute range. But like I said, I'm not going to always really mark this entire range like this, because I trail and I mark my ranges using the advanced method, which is finding inducement and looking for the PY below inducement. So something like, there's no PY here, there's no PYs here. So the only other PY is this one here, right below. That's unmitigated, because aside from this one, everything else here is liquidity. And I don't remember if this does hit or not, but point is, that's where you could have taken your longs, right? And your 50% tool will be something like this. I know it does look weird marking this as the start of the 50% tool, but that's just what I found works very well, just because technically this is the PY that price is likely looking for after taking out such inducement, which is all this here. Again, if we didn't take out this learning session high, I think it's valid or much better to take this long here. But since we did, you can expect a bigger move in the market, so you want to be careful. There's 1.9 risk reward there. Just got an alert, I think, from a trading view. And then here's another setup. Like I said, we took out learning session high. You expect a bigger downside move. There's another short here you could have taken. IFG here. Whoa, what just happened? Oh, replay mode went away. Okay, yeah, so this would be IFG here. And then, I don't know why our trade view is kind of lagging today. Your target could be like a demand, or like I said, targeting this. Because if you think about it this way, this is either going to be your mitigation phase, expansion, or it's going to be just one move here. Even though you see two moves here, this is basically an entire one move here going to take out all this unmitigated, or fully mitigated, sorry, I meant. This is kind of like trendline liquidity in a sense, since there's nothing else unmitigated. The next zone I trade off is here. Again, it's a weird looking zone, but it works because we have liquidity. We have this low and we have this low. So again, you could have made very nice risk reward. Again, you also could have taken this here potentially, and you might have taken a loss here if you're trying to short that. And again, for that trade here, this trade here, ideally all this is inducement, but some people may see this as inducement for this PY, so that's also valid too. But ideally all this is inducement for a better PY above here, and you can take a short. That's very nice risk reward there. And then of course, now that you know that we had the somewhat big move, we took out at least liquidity. Now, how do you define big move? Usually I define it as taking out an external liquidity or some sort of like internal swing structure that's built up. So something like this, right? Then you can expect expansion. So then all you're doing is just trading the expansion, waiting for entry confirmation. Like I said, here's my OB entry model. Cover your stop loss depending on how you want to cover it. And then your next target is the highs. Now, I wouldn't recommend trading here. It's market's about to close soon. If you were trading here, 100%, don't be targeting something outrageous like this. Volatility is low. Just target somewhere nearby. 3.4 there is fine, right? That's plenty of risk reward. That's more than enough. After all this, 20 plus risk reward, 3 risk reward is completely fine. So hope you guys do enjoy today's little breakdown. I know this is one of my longer trade recaps, but I figured this might be helpful for you guys in putting the puzzle pieces together and understanding market structure and internal swing structure, as well as entry models much better. If you guys do want to learn more from me, you can click the link down below to apply for a one-on-one mentorship. Spots are closed for that currently, so there's no spots there, but you can also still learn self-paced with the 100 Risk Reward course. And I'll see you guys in the next video. Peace.